Good morning, everyone. Happy Friday. Welcome to the Trading Syndicate.org. I'm JJ, vwaptrader1 on X. Hey, Nate Lonigan, and here we are. Hey, Johnny, how you doing? Aloha, Cisco. How's it, brother? How are things in beautiful Hawaii? That's okay. It's okay. You know, the nice thing about trading is it's like surfing, right? There's always another wave. Always another wave. Hey, Juan, Mr. Mother Truck, welcome to the folks who are joining us on YouTube. Rufus, how you doing? Good to see you all. And this market is quite something. It really, for lack of a better word, trades exactly like a penny stock does. And it's very, it's just really interesting to see how. And it's a good thing I used to manipulate penny stocks because it kind of helps us in our analysis. So every time this market liquidates, maybe I should show you a weekly chart. Let's go to a weekly chart real quick, okay? Because it is the end of the week, right? We go to a weekly chart and you can see that we're in an uptrend, right? We haven't, we actually haven't broken that trend yet. I mean, according to my eyes, right? And the problem with this market is because we came from 4800s all the way up to 6300s, everybody is shorting the holy living heck out of this thing. And I'm talking larger traders, I'm not talking retail. And that's what's keeping the market propped up. And so we're still in the front end of this move. So liquidation breaks are bought in the front end of a move. Hey, Doc, good morning. Right? That's what happens in an uptrend. People buy liquidation breaks. Right? In a downtrend, they sell the rips. Right? But overall, I mean, we have this big balance from 2022 to 2024, and then we have trend. We had a liquidation break right back down to the cost basis, and then boom, right back up again. So remember that when you're trading. We're still in an uptrend, right? Let me just get rid of all this crap. You can see a nice clean chart. And the one thing that you got to remember is this market has gaps that aren't filled to the upside. That's just one of four, right? In the short term, right? We had a 50-point supply gap that filled in one day. One day, you filled a gap that was 50 points. There was not supposed to fill a 50-point supply gap in a day. Gaps down are supply, gaps up are a lack of supply. Okay? So, yesterday's liquidation caught a lot of people off guard. And really what that was the market. I'm going to put in the this is the Globex from 2 nights ago. This is tonight's Globex, okay? So the Globex from 2 nights ago gapped the market up, right? Then we opened and sold it off. This is a classic penny stock move called the gap and trap. And what that does is that allows the traders who are long position here to sell into the buying, right? A lot of folks don't know this, but the reason you take a market higher is so you can sell into it, right? You know how they say when markets are going up that buyers are in control? That's absolute nonsense. What buyer wants to pay more? Think about it. Buyers are in control when markets are going up? Who wants to pay more? Right? If buyers were really in control of price, it would be going down because buyers would want to pay less. Make sense? Right? So the sellers are the sellers of size, right? The gap creates a buying opportunity, right? What creates buyers, not a buying opportunity. What it does is it creates buyers. You guys with me? Do you guys understand what I'm saying? Just want to make sure. I know it's Friday, right? So when you have inventory and you gap a market up, you've created a bunch of buyers. First of all, you've created people who are short under here. They'll chase price higher to cover. So you have short sellers who are trying to cover, right? And then number two, you'll have FOMO longs, right? So that creates buying, right? And you just sell into that buying. And you sell and you sell and you sell. And magically, where do you stop? Did we take out the previous day's low? We didn't. Right? Yesterday, we didn't take the previous day's low. What's the other thing that we didn't do? Let me just get rid of the overnight. How are traders who are short pushing price up? Great question. So what is a short seller, Tim? And welcome to the stream. So when you take a short trade, you sell something you don't own and try and buy it back later, right? Cheaper. Now what if you sell it at $3 and the price goes up to 5? Well, if you don't have enough capital to commit to that trade, you got to try and buy it back at 5. If you get enough people trying to buy it back at 5, the sellers will see that and raise the price to 6. So short sellers are future buyers. If you get enough people short, you get a nice push up. Because sellers didn't just fall off the turnip truck, right? If you're a seller of size, I'm not talking a retail trader trading 3 minis. I'm talking somebody trading 2,000, 3,000 E-mini contracts in a wholesale type capacity. If I see that buyers are lining up, I'm going to raise the price that I'm willing to sell at. If I know that they are desperate, I'm going to raise the price a lot. You see how sellers are control? Does that make sense? To complete a short transaction, you need to buy back the product. Yeah, bingo. They spot the buying and they cut the supply. That's why I always say, look for the supply. Don't worry about the demand. We'll take care of the demand for you guys. Okay? You guys just worry about where the sellers are. They'll tell you everything you need to know. Right? If the sellers are raising price, it means that buyers are present. If the sellers are lowering price, it means that they're lowering price to capture what buying there is. Right? Cost basis is everything. Inventory has a cost basis. How much did you pay for it? How much do you sell it for? You put it on sale, that brings in buyers, and you can raise price. This is just like a used car lot. You got your used cars, you retail them out, you put them on sale, right? When they return them, you put some Armor All on the tires, you put it back out on the lot. right? That's all these charts do is they track the flow of inventory, right? So good questions this morning. Thanks for joining us. So once again, we'll go take a look. Look at yesterday. Big liquidation, right? Now, how many people do you think, when this market liquidated, how many people do you think are short here from yesterday? Because they followed price and they were thinking that this was going to happen. When yesterday didn't take out the previous day's low, that was like a big flashing do not short, right? So there's a bunch of folks trapped here, and they got trapped into that end of day lift, right? Because what happens at the end of the day, the wholesalers grab all the cheap supply, right? They had it here, they sold it here, they buy it back, now they're selling it back at night for profit, right? Trading has to make sense. There has to be a common sense business practice that is going on. If you don't understand the business, you're always going to be trading in the wrong place at the wrong time, right? And in the wrong direction, right? You're going to screw up all three of those things because you don't know what the heck's going on. None of this is random. You put $1 billion on a table and tell me that it's random, it ain't random, right? So I use market profile, Tim. Market profile is like a map of the city. It tells me where the stops are, it tells me where the inventory is. Then what I do, right, we use the market profile, we get a general directions going on, right? So we know that overnight inventory was long. It's corrected a little bit, but not significantly, right? Then we go and we look at a more detailed chart, right, which shows you where all the stops are, right? It shows you where the point of control is just a fancy way of saying this is where your inventory is priced, right? Buyers are never, only time buyers are in control is when there's a huge sale, right? When there's a massive liquidation, right? That doesn't happen very often in this market because this market is not structured to liquidate, right? Positions are housed and inventoried for decades, right? You couldn't sell, if you had 1 billion shares of Apple, you couldn't sell it all in one day if you wanted to. If you tried to sell 500 million shares of Apple today, you'd drive the price down to $5 a share. There's not enough liquidity. There's 15 billion shares of Apple in existence in the float. It only trades less than 100 million a day. Do the math. You couldn't sell it if you wanted to, right? So this market is rigged to go higher. Asset prices go higher. The value of the collateral goes higher. Everybody's happy. Asset managers make more money because they get to charge a fee based on assets under management. When the assets go up, the fees go up. Everyone's happy. Got to keep the private jet fueled, right? Gulfstreams aren't free. So here we have the stops upper and lower. Then what we do to actually trade is we use the 1 minute candle chart, which is a map of the neighborhood you're in. Okay? And that's what we do every morning. We go and we figure out where VWAP is, we find our cost basis, we do a balance zone, which is 78 to 81 and a quarter this morning, and then you double it to 87, which is profit. You double it downside, that's the discount zone. This is 4 times discount, right? And our trades are really simple because they're just based off when the market goes from one zone to another. So here, the market did a look below and fail, then it did another look below and fail, right? So what we do in our trading is when it does the look below and fail, you buy it when it fails, when it comes back up over 71. You put your stop here, and then you put some sell orders out, right? When the sell orders don't get taken, you exit your position. Here, you could have stayed long. Here, you would have had to exit your position. How often do I change my zones? I do these balance zones I do every morning because I want the fresh info, right? You could leave them, they'll still work. I have balance zones, like these are my big balance zones, like 65.47 to 63.06. These are zones that are derived all the way from COVID. Here's my original balance zone, 27.50 to 28.10. That's been doubled and doubled and doubled and doubled, and you'll see that the levels still work almost to the tick. Now, why is that so? It's because it's the same business, it's the same inventory. So I use these levels to day trade. The other levels give me situational awareness, right? So if you come into our room at the Trading Syndicate, Tim, I've got a document. It shows I've got a 5-step process that I do every day. The only way I've been able to be anywhere moderately decent at day trading is to have the same exact methodology every day. So I have discipline, right? So market profile, I'm not sure how to pronounce your name, Sagego, is just another way of tracking inventory. Okay? All that does, right, is it shows you where inventory is being bought and where it's being sold. How do you know when to push the button? Well, what you do is you practice, right? It's like anything else. Trading's a physical skill. So my go-to trade, which is based on the oldest business transaction, is when sell orders run out, it'll regain a level. So you buy above that level, put your stop under that level, and then sell into the buying. Look below, fail. You take the back end of the move, the fail, you buy, you put your stop here. You try and target the middle, right? But you put sell orders out. And the market will tell you if those sell orders get executed, then you can stay long. Here, if they didn't get executed, you exit your position, right? Now, why do I use a 1-minute chart? Because it forces you to think quickly. It forces you to trade faster. It forces you to get out of bad positions faster. The worst thing in the world is a slow trader. A slow trader is about as useful as a poopy flavored lollipop, right? They're useless. They'll never get work. You got to be fast. You got to think quick. Now you take those skills and you can expand them. The look below and fail works on a 1-minute chart. It works on a daily chart, right? On a daily chart, once you develop the skill and the capital, right? Here is a look below and fail, right? And it's a big one too. So here the market looked below 63.06, right? And it failed, right? So you buy, you put your stop under that candle, and you sell into the strength. Why wouldn't I use a DOM? I use the DOM to put my orders in. But Tim, let me tell you something from somebody who has manipulated level twos his entire life. No trader in his right mind, unless he's on a 3-day Coke binge, is going to show you what he's doing on a DOM. That would be career suicide. A DOM is an order book. Order books are meant to be manipulated so everybody who's looking at them gets suckered into what I need to do. So if I needed to buy a big position, I'd put huge sell orders out to force the stock down. If I was trying to sell a big position, I'd put big buy orders in to push the stock up so I would sell into it. Shorts are the first set of buyers. Exactly. Shorts are the first set of buyers because it's a risk-off trade, right? They're covering. So if the shorts come in and buy, right, then wholesale buys, then we buy, and this move up is caused by momentum traders and shorts who, this is where the smart money shorts cover. This is where the dumb money shorts initiate. Of course algos use cost basis. So I want you guys to remember that this is a market, right? That's why they call it the stock market, the futures market, not the stock hot tub, right? Right? Because what's the goal of a market? It's to distribute inventory. It's for smart money to get out of their investment into the retail flow, right? So the algorithms are programmed to make the delivery of product more efficient. Just like Amazon uses robots in their warehouse to make that logistical process more efficient. So algorithms just make the market more efficient. It's automation. You guys understand? And cost basis is everything. He who has the lowest cost basis has already won. That's why penny stock people make money while you guys lose money consistently. Because we get our stock for 0.001 cent. You guys are buying it at 10 cents. Right? All algos do is they make the process more efficient. They can do hundreds of trades in the time a human takes to do one or two. Right? It's just automation. Right? This is a business. Businesses get automated. Right? Okay. My system is actually not a system. It's actually the business. Right? It's not like I came up with this myself. This has been going on. You guys, unfortunately, have been blasted with a bunch of BS all over Twitter and all that stuff. This is how the business works. It's not a system, right? So when you're trading one contract, what you want to do, Reg, is you want to, first of all, if you came into my room, I would make you practice on the simulator so you know the software like the back of your hand. So when I tell you, put in a buy here, put in a stop here, when you get executed, put your sell orders out. That process becomes automated in your head. So you're not fumbling around, right? So you can trade 1 to 3 micros, use those, use our friends at Apex and all those places, use that kind of funded trader account so you don't use your own money. Because you are going to screw up. You're not going to make money when you're trading right away. It's a skill, and it's a skill that has to be developed and learned, right? Right? But you've got to be quick, right? So you're not fumbling around, right? The worst thing is when you're in a trade and it starts to go wrong if you hesitate. The longer you hesitate, the more money you lose. So I teach you, like a pilot, what to do. Like if you were flying in a plane, right? And the pilot came on and said, uh, good afternoon, everyone. We're going to hit some turbulence. I don't really know what to do, so I'm just going to grab this manual and kind of hang on for your life. Is that going to instill confidence? No, they're trained how to react, right? If you went to a heart surgeon and he was reading a medical book going, heart surgery for dummies, right? It's not going to really instill a bunch of confidence. How do you choose which LBF to take? That's what you take a lot of them, couldn't you? That's why you got to do these trades hundreds and hundreds of times to develop skill, right? It just doesn't happen. See, here's the thing about trading. Here's the magic bullet. Here's the holy grail. The holy grail is discipline and hard work. It's the only thing that's going to help you in this business. Right? There are no magic indicators, there's no magic algorithm, there's no leprechaun telling you which way to trade, right? Sitting there with a pot of gold, right? You just got to do the work, right? So, what do I tell you guys every day? Is this tradable? The candles will tell you. All you got to do is stop thinking about patterns and wicks and twicks and wicks. Look at these candles. Is that a tradable? Does that look like business that's tradable for you? No, it's not. It looks like the barcode on a box of cereal. Leave it alone. This is more tradable than that. You see? But you're never going to know that until you actually spend some time watching, right? That's why I recommend traders sit and watch markets, make notes, right? And seriously, otherwise, what they're doing is they're always running around like dogs chasing their tail, trying to execute and getting stopped out over and over and over again, right? You might be a slow trader, trade maker, but you're not a slow decision maker. That was the point of what I was saying. You don't trade a lot, right? And that's okay. That's not nothing wrong with that. But when you do trade, you're decisive, right? I'm talking an indecisive, undisciplined, slow trader. They're useless. You'd last about a New York second on my desk, right? We want you to be stone cold killers when you're trading, right? Instead of being food, we want to teach you how the business works. Now, you don't need to know about everything in market making. You just have to understand that there's a wholesale element to this business and they have a cost basis, right? So when they run out of buying, they put the product on sale, right? Think like a seller. See, we have been programmed to be buyers, right? All young kids are put in front of television Saturday morning. They're watching cartoons, right? Ads for sugary cereals, toys they don't need, and they program you. Why do you think people stand in line to buy a phone? It's ridiculous, right? They're programmed. They program you to be a consumer. I undo that programming in my room in my mentorship program, and I teach you how to be the predator, not the prey, right? It's vastly helpful because then you don't think like a consumer when you're trading, which is what they want you to do, so you just keep buying crap at the wrong time, in the wrong place, in the wrong direction. Now, London's going to open. Let's see what it does. Shake this thing up a bit. We're kind of stuck. Look at all those poor people who are buying GameStop at hundreds of dollars a share. Look at where it is now. All right, let's see. If London can't get down to the close, we'll rotate up to the 78s. I won't take a trade when it's trading like this. For me, this is a no trade pattern, right? I like to trade from the edges. We have any news today? coming out at 8:30? I haven't even checked. Of course they switched to Bitcoin, right? Whatever the people want, let's change it, put out some news, and try and sucker them into buying. The insiders made billions off that deal. That thing was trading 10, 12 billion dollars worth of dollar volume every day. You could have sold $2 billion worth of stock a day into that volume and nobody would have even noticed. Thanks, Alexander. See, this is all of you watching this. This is untradeable because what's going on is the wholesalers are just both sides here. Watch. See this little box? They're just both sides of that box. That's a little rotation. That's not meant for us to trade. So knowing when to trade, that's barcode trading. Yeah. So what the wholesalers are doing, because the order flow is really slow, is for this whole period of time, they've been both sides of this little box, right? They sell above 77, they buy underneath it. So that doesn't help us at all. There's no follow through. So you don't put capital at risk. The smaller the consolidation range, you guys call it consolidation, we call it balance, right? The smaller the range, the slower the business. So just think about this is the time. What time is it now? It's 3 in the morning in New York, right? London is open, but London's got not much business to do, right? Think about, that clerk working at 7-Eleven. It's 3 o'clock in the morning. You get that one lonely hot dog going around and around and around. No, every once in a while, some drunk guy comes in and buys a hot dog or a burrito, but there's nothing really going on. Like there's no flow of customers. And that's what order flow means. Order flow is just a fancy way of saying customers coming into the store. So when you hear about order flow trading software and liquidity and all of that, that's all nonsense. Those are all buzzwords to get you to try and pay money for systems or software or courses that aren't going to make you any money. Before 1997, right? Before the late 90s, people would trade with a pencil and a piece of paper and the price every 15 minutes. You didn't have all this stuff, right? So how did people trade for hundreds of years without nose print charts and all that? Do angled cost basis functions? Oh, do you mean, are you talking about this versus this? So this is the establisher cost basis. This is the highway to the store. This is where you sell it, and this is where you're retailing it out. That's all. That's all it is. Just think of this as the warehouse. Think of this as the store. This is the highway to the store. Markets aren't complicated. They're very simple. Trading should not be complicated. Trading should be simple so you can focus on execution, right? It's not easy, but it shouldn't be complicated. Okay. Do you want to know? Good question, Doc. Do you know? You want to know how fund managers really make money? It's not from trading. Fund managers make money from financing companies at deep discounts. Say a stock's trading at $20, right? It's a pharmaceutical company, right? This is what we used to do because I was the executing trader for these funds. When they wanted a trader to do something quietly, right? Not their executing trader, they'd farm it out to me. So, say you have a pharmaceutical company, it's trading at $20 a share, and you need $30 million, dollars, right, to keep continuing your business operations because it's development stage. You put the word out that you're looking for money. My clients will call me up and go, hey, this stock, rip it apart. So I'll go and find out who owns it, who structured it, how it is, where it is in DTC. Then I'll start shorting it. I'll short it from $20 down to maybe 15 or 10. Then you'll go, the fund manager will come to you, Doc, and say, hey, Doc, you know what? I like your company and I know what you're doing. It's great. I can't finance you at $20, but I'll finance you at a 30% discount to your 14-day VWAP. So say your 14-day VWAP is, I've pushed it down to maybe $12 from 20, right? Or $14. So 30% discount to that, you'll say, sure, issue the stock, we cover our short, then we take the rest of the stock and rip it. That's how fund managers make two, three, four, five, $800 million in a week, right? The rest of this stuff, sure, they'll buy some Apple and hold it, right? They get new issues, right? All of that stuff. I don't know what GEX levels are, Lara. Sorry. I unfortunately I have no idea what that is. But for retail trading, all you need to do is use a 1 minute chart and have the ability to focus and draw a straight line. So fund managers make big money from financing companies at very low prices and blowing the stock off. And that's exactly what happened with GameStop. They were talking to a fund. The fund was shorting the stock. They told the fund to go away, and the fund was short. Yeah, I know nothing about gamma exposure, Laura. I'm completely no information about that stuff at all. You know, I teach people how to day trade, swing trade, and how to invest, right? So it's very, very simple, right? Here it's all I know is it's blue collar trading, right? I know there's a seller at 78. So if I was going to buy this thing, I know that there'd be competition at 78. I know they stopped selling at 76, so if I was short, I'd have to cover at 76. Right now, that's all the market's telling us, right? And it's slow, right? It's a slow morning in 7-Eleven, right? Very simple stuff, right? What does that mean? Don't throw any money out there. You're probably going to get chopped up. Hey, John, how you doing? Hey, Raj, right? So my mission in this business, right, is to help regular people make a living, right? So regular people can make their daily bread, pay their rent, pay their bills, right? I'm not here to sell the Lamborghini dream. Oh, look, are they going to let it breathe? If we got some buyers, we'll get up over 78. I just want to teach regular people how they can make some scratch, pay their bills, and make their life a little easier. Keep it simple, right? Keep it practical. Like, what can you use, right? The most practical thing you can do right now is not trade. If you want to be smart money, you don't trade. You want to be dumb money, you get in here and get chopped up 20 times. right? Real simple, right? That's why I don't talk about things like gamma and the Incredible Hulk and gamma exposure. That's like when I see gamma exposure, I think about the Incredible Hulk, right? Because I don't know anything about it. About 3 or 4 years, actually 4 years ago, we had this group in our trading room, and they were all about this gamma thing. We had a gamma room for them because they were like really about gamma, and they were angry that we didn't have a gamma room. So we had a gamma room for these people, and they talked and talked and talked. They didn't make any money. They could never explain to me what they were doing in simple English, and they all disappeared. None of them are trading anymore. So, not that it can't be used, I'm not discounting it, but I don't have the brains to figure it out and put it into a trading execution plan. Right? No problem, Doc. Yeah, that's how fund managers make money, right? They make their money from cheap paper, cheap stock. It's the only way to fly. I tell you, there's nothing more satisfying than selling 50, $100 million worth of stock in a day, right? And then telling everybody that you're a really smart trader. It's like all you've successfully done is shaken out a biotech company or something, right? You shook them down, you got a bunch of cheap stock. That seller at 78 is still there, right? So the box just keeps getting bigger and bigger and bigger, right? It's tight. I'm sure there's a use for it. I just don't know what it is. And for me, this is all I need. So why overcomplicate it, right? Why overcomplicate stuff? Just if it's simple, just keep it simple, right? Like I say, I'm not one of those trading educators who wants to sound smart, right? I just want to help you guys cut through the noise and earn, right? I'll leave the guys on CNBC to sound smart, right? Yeah, it's accepted, John. It's just a slow night, right? It's a slow morning at Greg's, right? We're not selling a lot of sausage rolls right now. Yeah, price is accepted right now. It's like nothing's going on. What's our volume? Let me take a look. It's 47,000 contracts. So volume's light, right? It's a slow morning at Greg's. You got one guy bought a sausage roll, one guy bought a muffin. What are those disgusting things you guys eat? The buddy batty booty things, right? Those weird sandwiches with sausages in them, right? You maybe sold three of those. They're not coming in like gangbusters. Oh, I think Steve's going to raise the price on the room. So if you want to join, give us a month. Give us, try it out for a month and see if it works for you, right? And when you join the room, reach out to me and I'll spend some time with you. There's a lot of kebab shops in Liverpool. All right, let's see. Can we get up to VWAP? Ooh, this is the biggest green bar we've seen all hour. Goodness gracious. Not much excitement. Looks like we're in for a nice slow Friday. I hope. Can we get a stop run? It's going to be one of the slowest ones in history, AZS. We do have a poor high. Yeah, right where those single prints are. No problem. How was the drive, Raj? Oh, hey, we're almost up to VWAP. Call the newspapers. Extra, extra. Woo! Gosh. Now let's see if we can take the stops at that K high, which are at 80 and a half. So now, what's the businesses now? Those traders that bought long inventory here, right? Now they're going to try and sell it up here above VWAP, right? That's it. This is a wholesale business. So they build a position and then they try and sell their position up here. And they'll use VWAP to hold it up. If there's enough buying, we'll come and take out these upper stops. If there isn't, they'll be happy to sell it here. Because think about it, if you're long 1,000 contracts in this area and you sell 1,000 contracts here, even if it's just 1 or 2 points, do the math. It's good money. It was a slow look below and fail, Morant. And see, that's my discipline has been off. Right? I did not take that trade. I'll wait till it's a bit busier. That was really the one trade. And it didn't even make it all the way up to 81 and a quarter. French flag on the chart. Nice work, ACS. So we took one stop. That one, right? And it's stuck again. Now, one thing I will warn you guys about on a Friday, okay? For anyone who's a perma bear, and why do I talk about shorting so much? because shorting is glamorous and retail traders love to short, right? So I'm telling you, if we get accepted above that overnight high, right? If we blow out that 63.88 and three quarter, what you're going to be doing is you're going to be looking for 6400 and 6408 and that high from yesterday, right? Because check this out. You've got, this is the inventory from yesterday. Its cost basis is here. We could go and sell it up here for profit. And if you hold price steady long enough above 63.88, you'll do that at the end of the day on a Friday. Just so you know. It's possible. These big back and forth moves, they keep cleaning out the inventory. That's why the market pops. So just be aware. Now we're going up into the 81s. Let's go see. We took another stop just by a tick. Sort of creepy crawling our way up, right? And wholesale is selling. Make no mistake. They are selling. They're long here, and they're getting rid of it here. That's why it's not just jamming up, right? Hmm. You know, any level that you're looking at, whether it's gamma or whatever, make sure you watch the reaction at that level. Okay? That's what you want to spend your time doing. You watch the reaction at that level. Yeah. And we'll probably hit some resistance up here in the 86s if we creep up there. It's another slow night. Another slow night. Well, folks. Yes. Yeah. So, John, if good question. So, if they take this product and they sell it up here, right? Say it goes sideways, and then it falls back down, and you go back up there, you can expect some resistance. Do I take bigger positions when it's slow? No, I do not. When it's really slow, I don't. I like to get in and out, Grant. Like I've been trading for 33 years, so I like just getting in and out, making some money, and then going and doing other things. When price clears out inventory in a choppy range and then rallies, does that necessarily mean that there were enough shorts trapped? Both, actually. That's a good question. There was enough shorts trapped to add fuel to the fire, right? And markets are structurally biased to go up. Listen, if I asked you guys, I said, hey guys, give me $5,000 today, and in 3 years you're going to owe 150 grand. You'll be like, JJ, what are you nuts? Well, that's a stupid investment decision. I give you 5 grand now, and in 2 years I'm going to owe 200, right? But if I said, hey, give me 5 grand, and in 2, 3 years you'll double it or triple it. Well, that's what investment's all about, right? People buy equities for capital appreciation. Short selling is just a small part of the business. But everybody thinks short sellers run the market when they don't. That's a good question. Yeah. Uh, I haven't even looked at that stock in ages, Raj. What's it trading at? Nice look above and fail, Moran. You caught that? But hey, at least we know that the levels are working. We stopped at 78. We looked above 81, came right back to the balance. So the balance is working. That's what I look for in a balance zone, right? So when you look above and come back in, you go right to the bottom, right? Tilray and Liverpool? You guys haven't been to Liverpool in a while. Liverpool is where it's happening, man. I tell you. Next time I see Raj, I'm going to have a Scouse accent. Hey, it's the best city in England. Hey, I'm very loyal to my Scousers. I love my Scousers. Great people. They treat me very well here. I love this town. Ah, gosh. What a snooze fest, eh? Well, folks, thanks for stopping by. Come visit us at the Trading Syndicate if you want to learn how to trade without all the nonsense and double talk. And if you're having trouble with funded accounts and things like that, come hang out with us. We'll teach you how to pass those evaluations. Have a wonderful, wonderful weekend. If I don't see you at 9 a.m. Eastern Time, that's when I do the next stream. What's the reason to be in Europe? Oh, I just like it here. No, I I, I met my girlfriend. She lived in London, so I moved at the time. Or I came over and yeah, I escaped Canada. Hey, mahalo, Cisco. Get some rest, brother. Hey, it's Friday. It's Loco Moco Day, right, Cisco? Go to the Rainbow for me and have some Loco Moco. I miss Hawaii too. All right, guys and ladies, thank you for being with us. We will see you at 9 o'clock. And if we don't, have a wonderful weekend. Really appreciate you being with me. And maybe next week we'll actually be able to run some more trades. But in the meantime, enjoy the weekend. Thanks. Bye for now.